Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, October 14th, 2021. It is 2:27 p.m. Eastern Time as I'm starting the video, and I wanted to get a relatively brief update out regarding the broad markets, Treasury bonds, and precious metals. Those are really, three of the trades I've been focused on most recently. Uh, I'll always update the markets in just about all the videos, at least a brief update, especially if there's things going on. And I wanted to follow up to the post I sent this morning. So in pre-market, we were right here. We were back testing the downtrend line in QQQ. We've since taken it out. And of course, there's no way to spin that as anything but, bullish, near-term bullish as of today, as long as that breakout sticks. Now, if it fails, obviously that's not. You get a, check mark for the bears, not the bulls, and it negates that. But you also have, as I've been mentioning in recent videos, there's quite a bit of resistance above that trend line. And the trend line, it's decent. I have 1, 2, 3 distinct reactions, but not great. However, I want to get to the futures. I didn't post that chart this morning. Probably should have included that because we are at a comparable trend line on the futures right now, NQ. So I'm going to get to that in a second. So we are at the bottom of this gap right here, that at least the top of the candle from that gap back there on Tuesday the 28th of September. So there's gap resistance right there. And of course, you have the bottom of the gap comes in as resistance here, and it's this box. And then the top of the gap around 370 or so would also be resistance. So it's far from smooth sailing, but I do feel good about hedging up this morning. I told you you could take a long on Facebook because it just broke out. And I'd mentioned recently all the FANGs had positive divergence, and quite a few broke out. We're going to rifle through those quick. Then I want to show you a couple other considerations on QQQ and SPY. We'll look at both of those on the longer term charts. Then I'll roll into treasuries. Real quick update. I want to show you a level we're at there. Maybe time to book profits on those that took the long the other day. And precious metals, of course. That's really the hot trade right now, in my opinion. One of the better looking trades on the long side right now. All right, so there it is. That's QQQ 60-minute chart. Let me just while we're on the Qs, let me just show you the updates on Apple and all the other FANG stocks. All right, here we go. Apple, I pointed out, and they're so far playing out that these were the most bullish setups, bar none, in both the Qs and the top market-leading FANG stocks. Positive divergence, bullish falling wedges. All these are still the 60-minute time frame we're on. Apple broke out, but it stopped so far at the 61.8 fib retracement from this level right here, from this leg down, not the entire move. From the entire move, if you want to try to put things in bigger perspective, let me color code these another color to differentiate from the other fibs I have on there already. And so far, from the highs down to that recent low, Apple's retraced not even 50%. So really, hardly a counter trend rally at all if you look at the bigger picture. So again, cross currents for sure. I would be remiss, have been mentioning, it's not that I've been remiss, I would have been remiss not to mention these wedges. There's a breakout back test, and so there's pretty big resistance on Apple. We've already been checked there a couple times. 144.25. Again, 61.8% fib. If it can take that out, then you do have then at that point you have a little more confidence to say there's early makings of a new uptrend. Could just be a corrective wave still, but a break above 144.25 would take you up to about that 147.16. That's the uppermost potential target and resistance I have on there, and we'll see what happens there. I just want to point it out that we still have that divergent low in place. Bears want to see this breakout fail. And again, it's not, relatively speaking, it's not much of a rally so far. In the past, these 60-minute divergent lows have been the catalyst for the move to the new highs and beyond. Microsoft, same thing. Again, they were all setting up recently, and most of these broke out. Apple already, Microsoft as well, started moving off those divergent lows. Microsoft stronger than Apple. Alphabet, GOG, again, divergent low, rallied up, hit the 61.8 fib to the button, and we're right there again. This is the 61.8 Fibonacci retracement level right there of the entire move down off the highs down into the recent lows right there. So we're at resistance as well on another big FANG stock. There's Amazon, and again, I'm just showing you the 60-minute chart. Some of these had support on the daily that it needs to be taken out at the recent lows. Amazon, as I said, was actually one of the better looking ones because it has big support right here. And again, quite bearish. If that support's taken out, I have that line at about 31.71, give or take. And so far a somewhat muted bounce, but we did take out this downtrend line. So there's another one, like Facebook, took out a downtrend line today, struggling with that 33.15 resistance right now. Again, so near term, bulls want to see that level taken out, bears want to see a rejection. Still anybody's game. I'm going to get to the longer term charts and show you that in a second. And then here's that Facebook setup that I gave you today. There's the breakout. This is a well-defined downtrend line. Look how many reactions you have on it on the way, distinct reactions, and quite a few right there, and then a breakout. It's not really ripping or anything, but it is a nice offset if you shorted the Qs at the trend line today, or if you're already short the Qs. Then I think this is a good hedge. I think it has more bang for its buck. And again, I also mentioned that it hit that 200-day simple moving average yesterday, and that line has just done a great job of acting as support in pullback, containing pullbacks. And then again, support once broken is bearish. That's where it broke down back then, followed by a 20-something% drop. So there's a case. And I like these kind of trades because you can hit it in pretty tight. You can keep relatively tight stops. The risk reward's pretty good. And again, I just feel with the equity markets kind of just taking forever to play out. We hit my first and second target on QQQ pretty quickly, but that third target, if it's going to be hit, boy, it's just taking a lot longer than I would have thought at this point in time. Remember, we hit T1 quick, T2 relatively quick as well, and now T3 is still question mark. We'll see. All right, let's move off there. What else needs to happen? If you're holding off, if you are, well, spin this any way you want. If you're bullish, there's objective long. If you can buy pullbacks to this trend line, we have a lot of reactions, 1, 2, 3, 4, 5 there, and more here. So you can buy pullbacks to the trend line. Still favoring another move down. And I think that'll come and hit those 200-day moving averages and that 342-ish target right there. But again, support is support until unless broken. So that you want to set a price alert, you want to set it below that trend line or even the recent lows, and that'll tell you that we're probably going to take another pretty impulsive leg down if and when that level's taken out. Okay, now why is it still a decent chance? We can see that and then some. I gave you potential additional targets. Right now they're not my current targets, but they are certainly targets that have the potential to be hit if things get going. This market by many metrics is not pricing in risk efficiently right now, the potential risk. And then one of the things we can look at here on the weekly chart, remember I use this PPO histogram. You can look at the crossovers, the bearish crossovers. That's when the lines cross right here. But it's also easier to see when you put up a PPO histogram. And again, these red trends, that's often when corrective periods have come. You get the corrections during the red trends. There was a red trend right there, or when the PPO crossed bearish, and it got you, out of in your shorts and out of the longs pretty quickly. But of course, we had sell signals in price back then, as we do now. This one's just taken a little longer to play out. We hit support, and whether it turns into something more like this, or it doesn't have to be a straight down drop like when COVID hit, something like this right here. That was that big Q4 drop right there. Very profitable trade on the short side, and we caught it. We had sell signals early on up here after a breakdown. And again, so it shows you the PPO is a pretty reliable indicator. Now, anytime you're using something like moving averages, a pair of moving averages, or the PPO, for example, which consists of two lines, one of those being the moving average, the signal line, the one on top that crosses down here. Anytime you have that, and I'll use these histograms, I'll replicate them with moving average pairs too, like the 50 and 200 day. So anytime you get those bearish crossovers or sell signals, if the shorter the moving average pair or the shorter the time frame, let's say we're talking about the PPO right now, and you go down to a 60-minute chart, you're going to have faster signals trigger on the shorter term time frames, so that can get you into longs quicker on a bullish crossover, or out of your longs and into shorts quicker. But you're also going to have more whipsaws. That's the downside. And so you can see on the daily, well, I don't have the histogram up here, but you're going to have more crossovers than you do on the weekly. So there's the weekly, there's a crossover, and you can see more whipsaws. Now, and I'll leave it here, and then we'll just do a quick update on the futures and SPY. Here's the monthly chart. Here's the entire, this is what the market's done since back in, when it peaked in '07, we had the Great Recession, roughly 55% bear market that followed, and some big corrections in between in the Qs. And the candlesticks will show you better than a line chart, because candlesticks you can measure from the highs to the lows, and that's what I've done here. So what I want to show you real quickly is this. So I didn't measure this one, but you can see it's a drop and it's double digit, and it crossed over, and the bearish PPO crossover came not right away. It'll take a little while, and again, this is a monthly chart. So we won't know until another 2 weeks, a little over 2 weeks, October 31st or whatever last trading day of the month will be this month, whether we're going to finalize this crossover. But I want you to see we have crossed, and so there is the potential for a pretty powerful sell signal. And again, it's next 2 weeks are going to be telling. This bar right here, this red bar, and again, it's pretty flat. You'd have to really zoom in the video to see it. It could turn green, and will turn green should the Qs rally up from here into the end of the month and cause the PPO lines to cross back over. But as of now, it is a crossover. And what you need to note as well, the crossovers like this in the PPO, they don't come from high levels when the PPO line is way above the signal line. Here's your PPO line. Let me park the RSI out of the way for a minute, and we'll focus on the two indicators. Remember, this is the same. This is your PPO. This is just the histogram showing you visually when these lines cross. So there's our bearish crossover on the monthly. The last time we had a bearish crossover on the monthly was right here. Given by the end of the month it was too late, but that did correspond with that 31% drop into the March lows when COVID hit last year. All right. Time before that, we had a 24% drop, and again, I'm measuring from high to low, and the crossover came early on in that correction, so there was plenty more downside. These are monthly candles, and then you had a crossover here. You had very slight marginal upside, and then you had a very fast drop back then in 2015. In fact, it was a 26% drop from high to low in QQQ. So you get the picture. Pretty reliable, not 100%. Here was a crossover back in 2000 and early '08, right after the top came, and that was, you would have caught the bulk of a 55% drop. You would either profited from being short or got out of your longs and sidestepped that bear market. So again, not a lot of whipsaw signals. I'll say it, this is a whipsaw signal. There was some downside actually, a little bit, but not much. It was a small correction. This one, again, by the time you got the signal, there wasn't much left. So no indicator is perfect. I'm going to say that now. But again, go back in history, replicate this on your own chart, and you'll see the biggest drops in years and decades. You can go back as long as you want on this, have come early on. You get these crossovers. And again, when you see these, what I call hills, forming in the PPO. The PPO is measuring momentum, and when the momentum starts to slow during a bull trend, that's when the momentum indicator, like the PPO, will start to go down. So these crossovers come after you get these PPOs, those bars really low on the histogram. You can almost anticipate them. The problem is sometimes they look like they're going down, and then they go up a little bit. So it's not, you can't always get in front of them. But again, look where we are. This has been falling. All right, so that, if nothing else, I think it makes a pretty good case as to the long-term outlook right now is bearish. And again, this can change by the end of the month, but this is the first crossover we've had. We didn't even have an intra-month crossover for a long time now, since back here. And where might we go if things get ugly and this plays out and we get that monthly sell signal at the end of the month? I think very reasonable at least check this bull market, primary bull market uptrend line that comes off the late 2008 lows in QQQ, and that would be a drop of from where we're at. measure it. I have to grab this candle, come down. Let's say it took about that long to get there. It'd be about a 30% drop. So again, I'll do this video. I'll try to remember to update at the end of the month. If this is green, then it just means, hey, no sell signal. And once again, let me be clear, that won't consider that a whipsaw because it's not a signal yet. It's just a development intra-month, something worth monitoring. And I could tell you this right now, we won't have to wait till the 31st if we get rejected here on the Qs soon and take another leg down. And let's say, any time, as long as we don't go higher, even by going sideways, the momentum, that will probably get that red bar on the monthly right there. So, what I'm getting at is heading in another week or so, if we're really, pretty far down here, little chance of getting back up here, then I think it'll be safe to say we'll probably get that signal. So that's something to watch for. Okay, moving on. Probably more time than I wanted on the markets, but I think that stuff's important. All right, now this is important too. NQ. This is a 2-hour chart, or 2-hour candles, 6 months of price history, and there's a trend line. I've had this one like this for a little while here, quite a while, and I didn't realize this morning. Shame on me for not posting that, but there it is. We're right about that trend line now, very close. So again, it's not. Like I said, the Qs broke out. It took out the trend line, at least the way I have it drawn, but we haven't taken the trend line out on NQ yet, the NASDAQ 100 futures. And, just looking at the entire move, we can put up Fibonacci retracements. So let's do that. Let's see if I did that right. Fibonacci lines, and nope, that's not working. One more time. Click on the fibs, put them up. And that tells me right now, it's hard to see in the video, I'm sure, but we're right dead smack right here, 50% Fibonacci retracement. The lines didn't snap, so they're not there perfect, but close enough. You can see I did a pretty good job of getting the top and the bottom. About 15,028.50 right there, and we're at 15,035. We're right on that line right now. So we're at the 50% retracement of the move down so far, and that could still be just a run-of-the-mill correction. Now we start going up again. Hard to chalk that up as anything but near-term bullish, but this bullishness, I don't go from completely bearish to completely bullish. Everything's in incremental steps. It's just a check mark for the bulls. If they can take out both the trend line and that 50% fib, then they've got the 61.8 fib. They take that out. That increases the odds of more upside. And then finally you have, look at that, that's 76.4. Fibonacci is right at very good resistance. Big reaction high there, nice support there, resistance right there, and that level is about 15,360. You take that out and it's pretty much smooth sailing. I've got one more resistance level in place at about 15,535 before the highs. So there it is. There's NQ at resistance. Long-term chart, still probably the best case we can make on the long-term charts going out to that monthly in a long time, that we could be in the early stages of a much larger correction. So that was my point on the long-term charts. And then the short-term charts, we watch and look at each level and take it day by day, tick by tick, level by level, and see where we're going. I'm still leaning towards this way, still maintaining that T3 third target on QQQ. Now let's look at the futures, or SPY, and then we'll wrap it up, get to the, well, not wrap it up, I want to get to treasuries and the metals. All right, let me give you ES for you ES traders, and also the fact that ES, the S&P 500, is still the stock market. It's more so than QQQ. I just think QQQ is a better trading vehicle, but a lot of traders trade ES, so I'm looking forward here, guys. Give me 1 second. There it is. All right. The trend line on ES is not as well defined as NQ. We only have from the highs there, this where I'm starting, another reaction here, and really not one sense, and we're moving through there. So I'm going to really give that trend line a question mark. I like the trend line better on NQ, but what I can show you here is at this point, see this previous high, see where we're at right now, we have pretty strong divergences right there. If we go up much more, because we have about equal highs here on the RSI but lower highs on the PPO, If we go up much more, that takes away this RSI divergence, and we're going to have the PPO divergence unless we go much higher. Still pretty good resistance up here on ES overhead. So like I said, not much has changed on my outlook. I still think we're going to take another leg down, but again, the more we go up, kind of chips away at that. All right, last but not least, for you SPY traders, I didn't cover that yet. Let me just look at the 60-minute chart. All right, and what you have here is the lines load. There's that trend line on SPY taken out, but there's also the gap, just like you're dealing with on QQQ. SPY, we're at the top of the gap right here. That's gap resistance in SPY, and we're also at, I need to move this line, that fib line right there. You also have the 61.8% Fibonacci retracement right here, that line just above current levels, and you also have the divergences there as well on SPY. All right, moving on. Quick update on TLT. I just booked profits on the ZB, the long, and I'll tell you why. This is the 60-minute chart. They're probably going to be more upside based on the 60-minute, but I think we'll get a pullback here soon. I have a series of resistance lines here on the 60-minute, more of a target zone. We're smack in the middle of it now, but more importantly, you look at the daily chart of TLT. Remember this range that we broke out of recently? We had a sideways range. The bottom of that range being about 146 right there. That says 145.97. Close enough. We'll call it 146. And we've moved up to, well, we hit 145.96. So 1 penny shy of where I have the level. And that's why I just booked profits on ZB. We do have a bullish crossover in place, and if it continues up, then these are the next levels right there, but I favor at least some profit taking on. This is the biggest move that we've had in treasuries in quite a while, and you can just measure it this way. If you put a trend line, it's telling you two things. It's telling you the scope of the move, how much we went up in percentage terms or absolute terms, as well as how long it took. You can see it was only a 3-day rally, but when you put that line there, it was the strongest 3-day rally that we've had in quite some time. That one's close there, but again, one of the bigger rallies. So I think we'll see some profit taken either way. Just stay with it if you want. Trail stops up. Me personally, it was a nice trade for a few days. Get out, take profits, and wait for the next setup. And then of course ZB. Let me just show you the actual futures. And of course, there it is again. That was my target on ZB. Minimum target, first target, 160, 150. And that's what we hit right there. Boom. So we'll get a pullback. We'll see what happens. Who knows? Maybe a little inverse head and shoulders. Anything can happen, but and we can keep going up. So if you're going to stay long, just raise your stops, and there's your next stop there, next likely target or resistance about 161, 244. Gold and silver. I've done quite a bit of updates, so won't spend a lot of time. Just still looking good. I'm going to get to the currencies in a second. Gold moving up, coming off this divergent low. Those are what I like to see. Divergent high, get out. Divergent or get short. Divergent low, get long. And so forth. Divergent high right here, correction. Divergent high, correction. Divergent low, rally. Simple stuff, really. Anyways, coming up on that 1809-ish target resistance, and still. I think we'll move up to at least that 1838-ish level, if not more. That's GC gold futures. You're looking at a 120-minute chart. SI silver is right at the trend line, so worth noting. Maybe a pullback, maybe not. Still bullish and more apt to just ride out pullbacks at this point in time, even use them to add it back on, because I really think the charts are constructive now. There was our bullish falling wedge. It's been moving up since. And if we do pull back and you want to know, okay, you want to take profits here, you were swinging up to the trend line, well, you have support not far below, about 23-ish right there. Yeah, about $23. So maybe a little pullback. But either way, pullback or no pullback, deeper pullback or not, a break above that trend line, a solid break is going to be bullish and take us up to that next target around 24. And I'll give you one more right here for you folks trading SI, about 24,867 and then 25,849. So looking good. Let's look at the currencies. Euro still looking good. Both trend lines taken out. Bullish falling wedge, positive divergence, run up, hit that 116.29 resistance target almost to the button, reversed as it should. Initial tag of a resistance level or target from below often produces a reaction. There's your reaction, and look, pulled right back to the that was the first target there, first resistance, about 116. And so this is an objective area. If you took profits there as an active trader, time to cycle back in my opinion. I think we'll probably, buyers will step in here and then take the euro up, continue on up. Again, nice breakout so far. Nothing goes straight up. This is why you have these lines. This is how it usually goes. So looking good so far. Now, of course, we'll go down. You want to see a back test of the trend lines if we get it hold. If not, who knows? Maybe we'll set up at a lower level and still have divergence, and I'll be talking about it here. But as of now, that's my preferred scenario. DX US dollar futures, not much else to add. Nice breakdown, bearish rising wedge. Remember, dollar goes down, gold goes up. And it's nice to see that gold and silver holding up today despite the pullback in the euro and the bounce in the dollar. Again, I consider this nothing more than a oversold, near-term oversold reflexive bounce, and I do think there's going to be more downside to come. And then the trade ideas, and I'll wrap it up here, were silver. I really like the silver and gold miners, SILs. Really my go-to silver miners ETF if you don't want to go with the individual names. Just a nice run, but we're at resistance now. That 39 target's been hit as of now, and it's a pretty big level. So again, I showed you the silver futures at downtrend line resistance, and here's the silver miners back at. Remember, they broke that support right there, and now they're back at it. So support once broken becomes resistance. If they can power on through here, whether we get a pullback or not, that would be even more bullish. Why? Because it would mean this was a false breakout, and false breakouts or false breakdowns are bullish because you have all those that shorted the silver miners will step in, start to cover right here, and again, that's something to look at. So maybe a little bit of a trend line going right there as well, and that's it. So just like silver, the futures I showed you, a little more work to be done. And if so, that's going to increase the case that we'll probably run back and make another run at the top of this long-standing sideways range right here. All right, that's silver miners ETF, and then just to kind of keep on what I focused on the other day, I showed you a basket of silver mining stocks. Let me grab that on another monitor. Okay, here's that watch list. I've sorted it by the gainers today. First one being USAS. There was a comment and Becky made, lousy fundamentals. Absolutely, I've said it, and if I ever miss that, let me know. But I think I do a pretty good job of pointing out that I said this is a penny stock. It is a sub $1 penny stock, higher risk, and it's no coincidence at all, in my opinion, that it's up the most today out of the ones I covered. It's up 5%. In the last week or so here, this thing's rallied about 25%. And again, risk and return go hand in hand. Yes, is this the kind of stock you can wake up to a big gap down? Absolutely. But again, that's why you don't put a heavy amount in it. I will put a lot more into Barrick Gold or one of these senior mining companies than I would on a little penny stock. But I like to sprinkle a little bit into these smaller names. And this, by the way, it happened to be an old watch list I've had forever for silver miners, and I've covered this stock many times in the past. So just wanted to say that. And they're still looking at that $1 level, about 97 is the first target. But I've added a trend line, and that's the only reason I'm going over this watch list as well. Is I've added a few more levels to these. Again, these are the ones I covered yesterday. WPM, wheat and precious metals, coming off that nice support there, about 37, and right now at resistance. So here's a common theme as I'm doing this video. Quite a few of these stocks are at my first price target right now. Silver's at resistance, and so if you want to take the quick buck, nothing wrong with that. Maybe you get a pullback and you can cycle in. Although there's a possibility they can just keep going and you might get left out. So the next stop would most likely be this downtrend line, and then I'm going to lower that line down about 46.90 after that. All right, let's just rifle through these fast. SIL already covered. FSM Fortuna Silver Mines, again, at that 465 resistance target. If it breaks at, pretty thin up here all the way to about 590. So if we can break out, that would be about another 27% run. This is nice little consolidation here. There's your resistance. You might want to set a price alert. Whether we pull back or not. If we do pull back, then you look for a pullback to the bottom of the range, 375 for an objective long, especially if those divergences are still in place, or you can add on a breakout. Mag Silver, see, same story. Look at all these guys coming up to resistance. So we're either gonna get a little pullback here in the minors soon, or we can break out and keep running. Charts are pretty darn bullish. So again, if you're not a very active trader, you might want to sit tight on what you have, maybe add a little more if you're not in a full position right now. If and when you start to see all these levels get taken out, all these resistance levels, 1276 and AG after following the breakout, GPL breakout, impulsive move up. I'm going to raise this line up a little bit here and give you the number for GPL. That's Great Panther Mining, about 53, penny stock, higher risk. Trade it if you like it, don't trade it if you don't like it. SLVP, so global, another silver miners ETF, and that's it. I think I covered everything else. PAAS breakout, SVM breakout, ASM, same thing. If I didn't have the lines marked up, you have divergences, and most of these have some downtrend lines and stuff like that. All right, brings me back. That's that entire list. All right, guys, let me get the video out to you. Silver miners, gold. Oh, and of course, gold miners still look good. I don't, I'm a little partial right now to the silver miners, but I like the gold miners as well. I think it's good to spread around both. And there's GDX breakout candle yesterday, followed through today. Targets, these are old levels. I might have to tweak this a little bit, but somewhere about 34. Again, I think it's more of a getting in for the next leg up in these things right now. And if and as the evidence builds, just like the stock market, I talk about all those check marks, I'll keep updating. And the more check marks we get, the more it's going to increase the odds that we maybe make a run back at those previous highs. And more importantly, possibly a resumption of the bull market that the precious metals are in for years now. This has been a consolidation within that, or a correction within the larger bull market, and I still like these guys. All right, let's wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.